Hi, welcome back to Elements in Focus. I'm Grant Soliven.
And I'm Aaron Rheaume.
We are so grateful to have you with us. Grant Soliven here, accredited investment fiduciary and manager of advisor operations. Always so thankful to be doing with us with our director of financial planning, Aaron Rheaume. Not only is he way better looking than me, he's also way smarter than I am. So today we're going to be covering using his intelligence to dive deeply into tax planning. Again, if you're new to the show, we'll look at the 5 critical elements that affect the families that we serve. And again, success is never dependent on one thing, but failure can be. And these are the 5 areas that our team, our managing partner, Joe Clark, have established and where we've seen families just absolutely wreck their future over these 5 areas. And so we want to give you little snack bites of information you can take home to those Christmas parties and talk about with your family to ensure their financial situations are going the way they want them to. So the big one, we are huge tax nerds, folks. I don't think that's a secret.
Nope.
Tax planning is our bread and butter. It's what we love to do. Remember, tax planning has to be done by December 31st. At the time of this recording, we only have a few more days until that is accomplished. So please be sure to reach out to the advisory team if you have anything going on. If you're one of the families we serve, you know we've been on top of this for a while. Because tax reporting is when that clock strikes midnight, and all you can do is report back to the IRS what you've done. But Aaron, as we're wrapping up the year, big topics on the table. Why don't you go through what you mean here, tax loss harvesting and donating?
Yeah, Grant. Obviously, as you mentioned, this is probably going to air sometime in 2022. We are recording it here in the studio in 2021, and so there's only a few days left before year end. And so what I want you folks or the people that are listening to just take into consideration is looking at investments overall. The market's been it's done well the past couple years. And so a lot of times people have built up a whole heap of appreciated assets. And, it's capital gains that are coming from investments, and just there are a lot of winners, and sometimes you have losers in your portfolio. And so when we're looking at this from a fiduciary standpoint to help the families that we serve, we could be in a year to where there has been some capital gains recognized because we've got to rebalance portfolios. There's times to where you have to add those gains to the investment account. And so where this is going does not deal with IRAs or Roth IRAs. We're not worried about what's happening inside of those accounts. It would be specifically for a brokerage account, whether it's a jointly owned one or one that's an individual owned, is to offset some of those gains. Sometimes you have losing positions that may be at a loss, and so it may be time to part ways with them. And if you take a loss, you can offset some of those capital gains. And so it's looking at the year in review and saying, okay, are there positions in the portfolio that we could recognize some of these losses to offset some of the gains? Now, if you can't, then what do? Well, if you're charitably inclined, you could donate some of those appreciated assets. And I'm really just scratching the surface of the content and context of what we do in the office. So if you have questions, we can be as detailed as possible when we're talking about this. Just briefly, donating an appreciated asset is taking something that you've purchased that has a gain in it and moving it to a charity to where they are able to take the donation, sell that, and get a benefit to them. You don't recognize anything from a tax standpoint, and you could potentially get a deduction on your tax return.
Absolutely.
So a lot to unpack there.
There is. And if we're going to keep it pretty consistent and concise, as we always promise with Elements and Focus, just know this, some of the key points that Aaron made. Date your stocks, marry your spouse. Do not become tied to investments. When people do that, we see bad things happen. And if you have the opportunity and you are charitably inclined to give money to organizations, donating appreciated assets, and here's a key word, that are long-term. So long-term capital gained assets, you want to donate those away.
Owned for a year or more.
Exactly. You get a massive, wonderful tax benefit for doing so. And Aaron, correct me, the rules did come back 30% of appreciated, you can deduct on appreciated assets.
That's this year, but it could change in 2022. So we
true.
won't go into the detail of that, but if you're thinking about it next year, we'll make sure
you get the right percentage.
Yes.
So keep those in mind. There's a lot of opportunity, even as we're listening to this, starting in the new year. There's always tax planning that can be had and can be done. Don't forget that. If you have questions and you're new to the show or you're new to the organization, please schedule a meeting. Like Aaron said, give us a call. Ask your questions, 800-928-4001. You can send an email to talk@yourlifeafterwork. One of our advisory team members will be happy to answer a question that comes in from you. We're looking forward to helping you, again, address some of these 5 critical elements. And if you're looking for more content to digest, you want to hear more from our team, our managing partner, Joe Clark, or some of our other great portfolio managers, Adam Harder, Andrew Thrasher, please listen to our podcast. Consider this program can be found on all podcasting sources near you. And as well as you can see some of the radio stations that are available to us, WIBC, Shine 99, etc. We appreciate you being with us. Thank you so much for taking the time. Hopefully you got some education here and elements and focus, and we'll look forward to seeing you again soon.